Shares of CVS really popping here after beating Wall Street's expectations on the top and bottom lines in the first quarter. The shares up over 7%. CVS shaking off concerns about Medicare Advantage costs prompted by disappointing results from United Health. CVS also raising its full-year outlook for both adjusted earnings and revenue. For more on this, I want to bring in Brian Tanquilut. He is Jefferies Healthcare Services equity research analyst. Brian, a very different tone to come into my conversation with you than recent quarters where we've gotten to chat about CVS. To what extent do you think that this is a new day for the company?
Hey, Madison, thanks for having me and good morning. Yeah, so it is a new day, right? It's nice to see that margins came in good, especially in that Aetna Medicare Advantage business. That's been kind of like the problem child of the last year. So I think a lot of the things that we chatted about last year, the things that CVS, the levers that they were pulling, are finally kicking in, so whether that's exiting certain parts of the market and then the bonus payments that they're getting from Medicare for 2025, they're all working together. And that drove a pretty good margin beat in that Aetna side of the business. And then the pharmacy did pretty well as well, at least on the true pharmacy side of the business. And then the PBM did as well. So it feels like things are finally clicking for CVS and we're starting to see trends kind of stabilize across the business line.
Okay, so with that stabilization, Brian, for the stock at the levels we're seeing it trade at, does that make it more appetizing for investors who are looking to layer in more of kind of the PBM business back into their portfolio?
Yeah, Brad, thanks for that question. So the way I'm thinking about it is that, look, I think number one, the stabilization is a good sign for investors that we're more cautious thinking about the trends here, right? Like, especially as Madison mentioned earlier, United had a bad print coming into today's release from CVS. So seeing that CVS is seeing a trend that is more stable or stronger than some of its peers, and then obviously the diversification of its business, I think this is where investors can step in and say, okay, I have the confidence that we're just going to get better from here. Management adjusted some guidance ranges here. It looks like there's still conservatism in their projections for 2025. So we feel really good about this. And then the other side of this is, I think, the defensibility of this business, right? It's a drug business, it's an insurance business that obviously has heavy Medicare exposure. So at a time when we're looking at macro volatility, macro concerns, I think as things stabilize for CVS, it becomes even more compelling.
And I do want to talk about the weight loss drug elephant in the room. CVS saying its drug benefits unit did negotiate a deal to make Novo's Wegovy more widely available to its members. Do you think that this is setting a tone that others in the industry may follow?
I think so. I was watching the earlier part of your show, right? So what we're seeing is that these PBMs are starting to flex their market power. They're starting to use the fact that supply is starting to improve across the GLP landscape. And then there are obviously other drugs coming down the pike in the GLP world. So I think what we're seeing is that this is your typical PBM playbook where they're trying to pit different players and trying to put them in formularies that eventually benefit their members, that benefit the plan sponsors that are their clients, right? So I think we're seeing that. And I think, heading into this year, the market dynamic in GLPs made it difficult for the PBMs to really function in that specific therapy class. And now we're seeing it. So I think you're going to see more of this.
What's CVS telling you about the state of the consumer right now, Brian? As you have a lot of households that are just leaning into what they need. And unfortunately, the pharmacy and that part of the business is certainly what they need on an ongoing basis. But the other elements of the business that might have a little bit of pushback that's occurring.
Brad, if you think about the front end same store sales for the retail box, right, it was negative this quarter. So I think it shows you that there are pressures that are still persistent for the consumer, inflation, consumer confidence, all these things, right? But on the pharmacy side of the business, within the box, those numbers actually look really good. So I think what it's showing you is that the pharmacy is proving to be defensive. People are still taking their medications. They're still going to their doctors. It's just on all of the discretionary things is where they're pulling back. So the purchases that are, impulse purchases when you're waiting for your medications to be filled at the pharmacy, I think that's where people are trying to rein in a little bit.
And are you concerned at all about any policy change from the Trump administration negatively impacting some of the positive sentiment today?
Yeah, we're watching what tariffs would do to retail first, right? The front end of the store, obviously, there are things that they buy from overseas. They made it sound like it's not a lot. Like a lot of their purchases are actually from U.S.-based companies. So we'll see what the flow-through impact of tariffs would be on that. And then obviously the pharma tariffs that are being contemplated right now, although I think most of that will be passed through. And then the broad thing that we're watching is just what happens with, what's going on in Congress right now with the tax bill that they're trying to fund with cuts to healthcare, right? So I think that will have an impact on insurers eventually, especially those that are exposed to Medicaid, not much to CVS. But those are the things that we're watching for as it relates to like policy and regulation and politics.
Brian, thanks so much for taking the time. Great to see you.
Thank you.